All right, Foss, let's light him up. Let's go.
Cheers.
Oh, yeah.
What a great day.
Cheers, brother.
Yeah.
Larry, I know you're sticking with the water right now, but great to have you guys on the show, and what a couple of days we've just experienced.
Boy, that's for sure.
So Andre Loha put us together here, and he wanted to talk about the world macro view and how significant it is for Madeira to step ahead. So before we dive into that, why don't we explain to plebs like what's been going on the last couple of days? Why don't you go with that one first?
Sure. Obviously a tough few days. So for Bitcoin price, and it's my opinion, and I'm not certain about this, but having worked in a career in finance, it's a contagion effect. It is a result of leverage being withdrawn from the crypto ecosystem. And you know we hate crypto, the word crypto, but the reality is that leverage is being withdrawn from the crypto ecosystem, and it's hurting the purest form of collateral, which is Bitcoin, and causing forced selling of Bitcoin. These events include Luna, Celsius, the exchange that Bible, I think it was called, or an exchange that halted Babel, an exchange that halted withdrawals of Bitcoin. All of these things are the result of collateral and limits that are forcing margin calls. And when you have a margin call, as Larry knows, having worked at a hedge fund, that's one of the worst feelings in your life, okay? You get the tap on the shoulder from your margin clerk. We need to raise X amount of dollars because we're either having withdrawals or the value of our collateral has declined, and therefore we have to reduce the value of our total assets, okay? So I believe it's a form of a margin call within the crypto ecosystem that's bleeding through to the Bitcoin price. If I could say one thing though, I've always said that the Bitcoin price is a rounding error, and it is still a rounding error, and it's actually more valuable than it ever has been, because contagion is a global phenomenon, and we're having contagion in the traditional finance markets, and we're having contagion in the digital asset markets.
Right. That's the point I was going to make, that even broader than the collapse in the shit coins, the real thing that's going on here is Bitcoin is the canary in the monetary coal mine. And it basically, it's the leading edge of liquidity, always has been. It was the leading edge of inflation, and now it's the leading edge of deflation. And what you've got is extreme measures. The Federal Reserve just flipped off the switch and said they intend to keep it flipped off forever, and they intend to tighten it until they get negative inflation prints. And of course they can't do that, but it affects all assets. It affects them universally, and Bitcoin, being one of the cutting edge assets, gets affected the most. But if you notice, stocks are down over 25%, bonds are down nearly 20%. Almost all investment assets are down. The only exception is gold, which is only down 4 or 5% year to date. So what's really going on here is the Fed has hit the brakes or turned the switch off on liquidity. And it's symptomatic of what Kaiser always has said, which is you cannot taper a Ponzi. If they do not turn the printing presses back on, we're going to have the entire world economy is going to be a heap of rubble. It's going to look like 1929 or 1930. So the only issue is how long they continue with this until they've got cover for something breaking or the inflation print's getting smaller and they're able to turn the printing presses back on. We know that with certainty because the alternative is the Great Depression.
Nicely summed up. So here we are in Madeira. We want to talk about what's been going on here in the last couple of days. More importantly, I think the plebs want to know. I'll leave this one to whoever wants to answer this first. What the hell were you trying to do to Larry in that picture?
Why don't we let Larry go first?
It felt great. Yeah.
Hey, buddy. No,
I have complete trust in Greg, and I'm actually surprised he led with that on Twitter. I was like, Greg, don't put that on Twitter.
Yeah. And then we get Svetsky calling me out.
He's always looking for some good humor, and I got to tell you, the jokes this guy tells are fabulous. I mean, the guy, you can tell he was on a trading desk on Wall Street or Bay Street in his case, because he has got fabulous jokes, and this is just another example.
Yeah, nothing nefarious was going on. But you look at the picture, clearly it wasn't staged, but it doesn't look so good.
It did look like he was trying to grab my wallet, maybe.
Yeah, or worse. Can I take a step back, though, to the macro view? And this is really important, okay? Let's move to Larry's conversation about what the Fed can do versus what they're pretending they're doing. My favorite saying, it's only mathematics, right? They cannot possibly tighten to the point that they're jawboning the market to, because it will cause a global financial crisis in the form of a depression, at least a very severe recession until they decide to reverse course. But what can they do to skate themselves onside in the public persona? And my view, and this isn't getting a lot of press, I think they're actually going to change their inflation targets. Okay, that'll be the first, in my opinion, one of the first yellow flags, or waving of the white flag. They will change annual inflation targets from 2% probably up to 4% or more. Then people will say, oh, okay, so we're going to have to accept inflation, but that will give them cover to take their foot off the pedal. Let's go through what they've done. They've raised rates 3 times. There's an old adage, 3 hikes and a stumble, okay? I think we will see the stumble, but they continue to jawbone the market that they're going to raise rates another 7 times, right? Plus, they are going to remove quantitative easing or start quantitative tightening to the impact of another 4 interest rates. If you translated what that meant, it's estimated that that's the equivalent of another 4 hikes. So the Fed still on the table with 11 rate hikes. My opinion, and it's only an opinion, is they know they need to back away from that. How are they going to do it? Well, they'll start by changing their inflation target, because the Fed has a dual mandate that is impossible to achieve. One is to control inflation, and one is to maintain full employment. If you wondered who wrote these idiotic dual mandates, you could probably think it was a 2-year-old, because the two are not achievable in synchronicity. They are mutually exclusive. That's where we are right now, okay? And so what they'll have to do is change the inflation target from an untenable 2% target. What's inflation running at? 8.6% annualized, guys, and that's not really the true inflation, okay? That's a manipulated number in itself.
Yeah, and let me build on that. So the evidence of what Greg is talking about, this impending credit collapse, is everywhere, right? We see that the JGB, Japanese Central Bank, Kuroda, had things pegged at 0.25 basis points, and he was doing aggressive yield curve control. There's a chart that I just put out on Twitter this morning that shows that they had to absorb $80 billion worth of additional bonds. It was a spike of enormous proportions in order to hold on to that peg. And they're going to get more of that. People in bonds realize they're getting roasted. And they're going to look at these central banks and say, sold to you. Sold to you.
Well, especially when you have an escape hatch, right?
Right. I mean, Italy just had an emergency, ECB meeting, okay, to talk about, the ECB just had an emergency meeting to talk about credit in Italy. Credit spreads all over the place are blowing out. Powell's supposed to testify in front of, we're recording this on June 20th. Powell's supposed to testify in front of the U.S. Congress on Wednesday of this week. And my sense is he's going to start to walk things back, because it looked pretty ugly in the markets last week. The markets, and you can see it in Bitcoin, but you can see it in everything. And Greg says they have a dual mandate. They do, but it's actually a little trickier than that. By law in Congress, it says they have a dual mandate: full employment and controlled inflation. There's actually a third mandate that's emerged, and we know this because they talk about it in all their communique: financial stability and functioning of the markets. Right. And what we have to look at is in March of 2020, when COVID hit and the markets collapsed 20% very quickly, that's when they stepped in with the enormous printing of money that we saw last time around. And the reason they did that is because the US government bond market went no bid. And that could happen again. If people if this panic continues, if stocks continue to get hit, if bonds continue to get hit, these things could essentially go no bid. And if that's the case, they're going to say, well, these are emergency conditions. Yes, we've got an inflation problem, but we don't care. It's more important to keep the market functioning. And you're going to see a pivot that's going to make the 2018, 2019 pivots look like kid stuff. and they're going to be far enough, this is the important point to make, they're going to be far enough behind the curve, and things are going to be deteriorating rapidly enough that maybe 4 trillion is not going to do it this time, or 5 trillion.
Well,
they might have to
it's the math.
Right,
It's the
that's
math.
Greg's point about math. They might have to come back with 10 or more, right?
That's the law of exponential,
Exactly.
a debt spiral. You continue to have to, the debt
have to put-
spiral
every time you
is
have to put up more.
expanding, and the next injection has to be bigger than the last because the mathematical equation, the balloon, has grown.
So to keep on this macro view, like this is all going on in the Fed in the US.
Yeah.
The ripple effects, we're sitting on a tiny little island here in
Yeah,
Europe, just
yeah.
outside
Well
of the
put.
Atlantic, right?
Yeah,
So
yeah.
how does this ripple through the euro markets and
Yeah.
onto a small island like Madeira?
Well, this is amazing because Larry brought up, what happened. So let's be clear, right? An emergency central bank meeting, emergency is not a good thing, okay? That was the precursor to Italy, or it was the result of Italy's bond market blowing out against the German bond market and a spread between the yields on the two. And the ECB solution was to come with what's called a fragmentation tool. Okay, read quantitative QE infinity. Fragmentation tool, they're going to print money so that they can defend, they can buy Italian bonds, and they can push the spread between German bonds and Italian bonds back to a level that doesn't indicate financial distress in the Italian bond market. Again, it's just another, they call it a different name, but it's really quantitative QE infinity, okay? But here's the cool thing. Okay, you got the Fed, and you got the European Central Bank, okay? And then you have Madeira, that is a autonomous zone within the European Union that's 260,000 people living on a beautiful island, out in the Atlantic Ocean, that has some distinct competitive advantages. But one of the advantages that they are captive to is the European Union and the central bank, okay? And you can't control all of these economies as if they are one. And how do you feel if you're a German and your hard work is going to pay for the purchase of Italian debt so that the Italians can sit around and drink wine all day, and the Germans will pay for that? No, seriously, that's got to cause social unrest. It has to. Yeah. There is no other way. And this is why I find it in the word fragmentation is it's very fitting. Important. It's quite coincidental. Yes, it will cause fragmentation, okay, in the opposite direction of what they are intending.
Exactly.
Anything to add to that, Larry?
No, well said. I completely agree.
What are we doing here, and why is this so important to Madeira to understand this?
Well, that's a story unto itself, and you should introduce Andre Loja, who is our host here, and a Madeiran businessman who is also a maxi Bitcoiner, and had the vision sometime back to understand that the world was going to a Bitcoin standard, and that Bitcoin was a sound monetary development that would improve the outlook for any country that were to adopt it. I'm sure he saw the El Salvador example, and he was able to convince the president of Madeira to attend Miami Bitcoin 2022, which was a feat unto itself. And then from there, and got him meetings with Jeff Booth and so many other luminaries. And from there, he's now taken the step of bringing all of us to Madeira to basically help orange pill the local Madeiran government. And then by extension, to get the Madeiran government to try and work on the mainland government. And in fact, there are meetings planned over there for later this week. And so, and Madeira is an interesting place. It's a beautiful island. I wasn't aware of it before, but it's a beautiful island. It's completely a part of the EU. It's very civilized. The prices are quite reasonable. A lot of people vacation here, and they're very technologically savvy. And so they've made a lot of efforts in this technology space, and Bitcoin would fit perfectly underneath that tech-savvy umbrella. And that's kind of what's taking place. And it's going to take, there are going to be several steps. It's not like, they can't throw out the euro because they're part of the EU and the Eurozone. But they can make it extremely friendly to Bitcoin, and that's already starting to happen.
We saw it today, but firstly, a shout out to Andre, great host, right?
Yeah.
Just a great guy that sees the future. And What's something that resonates with me that you guys know, all right, is how much I care about children. And so I was able to meet his family yesterday. Great father, 4 beautiful kids. I mean, that's why we're doing this, people. We are a selfish bunch of fucks, okay? Old white men who are too scared to pay our dues and are robbing the futures from our children, okay, by all this quantitative easing. Pay your fucking debts, okay? Pay your debts and don't continue robbing the future of our children. It's disgraceful. Fat old white fucks, okay? And look at me, fat old white fuck. Sorry, but I had to break the ice, I swore.
Go ahead.
Well, look, so thanks to Andre, here's what we know. Yes, an island with a rich history, okay, technologically advanced. I love El Salvador. As you know, I'm a supporter of El Salvador, but you have to be a first mover to gain the benefits, because eventually all countries are going to try and do this to attract a limited amount but ever-growing population of Bitcoiners, either business-wise or intellectually or just with money to come and find a home in freedom, okay? I love this island. It's incredibly beautiful, but let's be honest, it can't afford what it has. I mean, the only way this was built from the infrastructure and everything was from debt-financed money printing that makes an island of 260,000 people very, very lucky, okay? Let's look 20 years down the road as to what a decision that the current administration could make to the advantage of the children 20 years down the road. And I think it's logical that they consider themselves Bitcoin friendly. We're not advocating at time zero they need to be El Salvador and accept Bitcoin as legal tender. There's difficulties within the European Union of doing that, obviously, especially if it's the European Union that is providing you with these infrastructure funding projects and everything like that, right? So he's a businessman, the president, he understands, but what I believe we are seeing is the beginning of a cooperation with a community of Bitcoiners that understand the power of a geographically remote region of 260,000 people that you could, 10,000 Bitcoiners going to Canada, that helps, but Canada is a country of 33 million or 36 million people. 10,000 Bitcoiners going to Madeira, that will have a noticeable impact on the economy, on the GDP, and various
There's some very interesting things that happened today. I mean, one thing that when the president of the country says, I can clearly see that this is the future, and he was speaking to Jeff Booth, he said, it reminds me of the anecdote in your book about Blockbuster and what Netflix
Correct.
did. And he said, I can clearly see that this is where we're going, and we have got to embrace this. We have got to have money that reflects the future money. The other point that Jeff made to him, and I think it was a great point, and it's obviously this lights up any politician or any development officer's eyes, is he said, look, I've got facts on El Salvador. When El Salvador did what they did, in Q1 of 2022, they had 532,000 additional tourist visits that quarter in El Salvador over the prior year. It was $119 million of additional tourist spending in El Salvador over that quarter. Their GDP, which had historically been flat for years and years and years, is now seeing double-digit growth. This is all because of the influx of Bitcoiners and Bitcoin-related money into El Salvador. So, he looks at that and he said, as a president, he has to look at that and say, you know what? This is the future, and if I want my people to do well, I want my economy to do well, I've got to do what I can to embrace this change. And he gets it. I was very impressed. He gets it.
I agree. I was very impressed with it. And I want to, this is a macro podcast, but can I insert a little micro economics in this? You probably know, maybe if you don't, I'm an owner of 8 Irish pubs in Montreal, a part owner, right? And these have been operating for 25 years. And restaurateurs is a very difficult business. We are good operators and we make about 14 cents on every dollar we sell, okay? So we have a 14% EBITDA margin. And if someone takes out their wallet to pay their bill with a credit card, we pay 2.5 cents to the Visa company. It's called merchant fees, okay? So our profitability margin goes from 14 cents down to 11.5%. 11.5 cents on the dollar of revenue, or 11.5% of revenues. Do you know what merchant fees are in restaurants in El Salvador? 8%. Okay, so if you are a good operator in Mexico, or sorry, in El Salvador, or any lesser developed country for that matter, and you are making 14 cents prior to them paying, and someone takes a credit card out of their pocket, your profitability margin has just been halved, okay? It's gone from 14 cents down to 6 cents, right? The 8% fee that goes to the Visa company. This is highway robbery. And the Bitcoin payment rails, regardless of what country you live in, eliminates the friction of a Visa credit card transaction. So I am going to press hard for my merchants in Canada to accept Bitcoin. And regardless of what merchant fees are in Madeira, they should do the same, okay? Because I haven't been able to swing a dead cat without hitting a restaurant in Madeira, okay? This is crazy. The amount of restaurants on the block close to where we are, every single shop is a restaurant. We need to know what the tourism numbers are. We need to know what the service numbers are in Madeira. Well, we actually know what they are. I can promise you that the impact of a Bitcoin payment rails are going to be very substantial in an economy like this.
And as you could say, I mean, Greg didn't say, but he went surfing this morning, and he paid the surf shop. He orange pilled the surf shop owner. He said, "Can we pay you?" His partner did actually.
Yes, correct.
Can we pay you in Bitcoin? Yeah. Can we pay you in Bitcoin? Yeah, I know that's the future, but I can't accept that yet. Fine. Do you have an internet connection? Yeah, we do. Okay, great. Let's download a Mun wallet. Okay, boom. Set up your Mun wallet. Okay, send me an electronic invoice for for payment to a Lightning payment. Boom, done. 2 seconds later, the payment was made to this guy's Mun wallet. He's a Bitcoiner now. I mean, it's not that hard.
Here's the name of the surf shop, if anyone cares. It's called Around Freedom. How friggin' cool is that? Because
Right?
what is Bitcoin?
Yeah,
It's
I mean,
freedom.
We were out to dinner the other night, and we'd run the credit cards, and we got paid. We realized we didn't give the tip. And same story. Have you got a Mun wallet? Do you know about Bitcoin? No. So we orange pilled the waitress. Okay, download a Mun wallet. Boom, send you some money. It's totally doable, and this is what's going to happen all over the world. People are going to start getting paid. I mean, and these costs, I was looking at it was like 7 sats to make this payment in
On the Lightning Network.
On the Lightning Network,
yeah.
right? I mean, what is that? Like 1/20th of a cent or something? I mean, it's ridiculous.
It's
basically free.
It's frictionless.
It's basically
okay?
free.
It's a meaningful reduction in the friction of the legacy system. Includes things like Western Union for remittances. It includes things like credit card payments for restaurateurs. It's happening, people. Adoption is increasing. Try to focus on the long term and the technicals of the Bitcoin network rather than the current price, which is
and I think there's a really important point to be made here, and I wasn't aware of this point. Jeff Booth really kind of educated me on it a couple of days ago. Many people out there who own Bitcoin, we're all hodling it, and the reason we're hodling it is because we know it's going to go up in value enormously. It's the best store of value vehicle out there, et cetera, et cetera. And he's like, yeah, that's great, and you should be doing that. But we should also be converting the payment rails and making the payment rails work. Because every single person who gets introduced and sees how easy it is, they automatically become a Bitcoiner.
Right.
And I'm going to return to the United States, and I'm going to find whenever I'm talking to somebody and they need to be paid something, and I'm going to say, would you accept Bitcoin? No. Okay, would you, if I helped you to do it, would you accept Bitcoin? And I'm going to start, great, let's download your Mun wallet, let's go. If every Bitcoiner were to do that with every payment they were making, to their babysitter, to the guy who mows their lawn, whatever it might be, think about how the word would spread that this is an incredibly easy payment rail. And think about the knowledge that the holder would then receive as a result of having some Bitcoin in their wallet.
Correct. Well said, Larry.
Are you thinking of opening some Irish pubs here on Madeira?
You know what? That would be crazy, but actually it wouldn't be crazy because Andre and I actually talked about an extension of that, okay?
Yeah?
Well, you know why? I got to tell you why. Because my good friend Ali from Real Tahinis, and this is the truth, wants to potentially franchise an operation in Madeira. And I told Andre I would invest in that opportunity. Why? Ali is one of the best entrepreneurs I've ever met in my life. If you guys don't know who Real Tahinis is, please look him up. Canadian, an Egyptian immigrant to Canada. My God, we're so lucky to have him. Brilliant beyond belief, eloquent, has lived through the Arab Spring. He understands the beauty of Bitcoin, and he accepts Bitcoin, or will accept Bitcoin at his Real Tahini's restaurant. He currently holds it in treasury. I like his style. Is there an opportunity to do something between Old Orchard Pubs from Montreal and Real Tahini's and the Madeira operation? Excuse me, anything's possible, including the fact that I'm looking forward to becoming a citizen of an island like this due to their.
All right.
Yeah.
Is that an announcement?
Not necessarily. I mean, look, I believe in freedom. I believe I'm caught up in the Canadian situation. I don't want to announce anything except I believe the golden visa program offered by Madeira is an absolutely beautiful thing, okay? And it doesn't have to be linked to Bitcoin for me to see the opportunity and the advantages of getting a European Union passport, okay, and having a backstop of a country that accepts that I shouldn't say accepts, that embraces and is Bitcoin friendly, okay? So, I will tell you, I'm very well. No, I'll tell you. Yes, I'm going to work with Andre to make this happen.
Love it, Larry. Personal note.
I love.
What do you feel about Madeira?
I love it. I love it, and I may do the same thing. I mean, we're investigating it. You know, I wasn't aware of it. It wasn't on my radar screen until Jeff and Andre reached out to me. But it's a beautiful place. It's an hour and a half, or less than an hour and a half flight from Lisbon. You know, the weather is great. The prices are quite reasonable. And of course, the locals say the prices are very high. I guess they've gone up a lot, like everywhere else in the world. There's been a lot of inflation, but it's a beautiful spot. And I think that anyone who is looking for a place to operate a high-tech business, you could do a lot worse.
Oh,
this
yeah.
is a very
and
good.
Compared to Canada, crazily enough, well, not crazily enough at all. Compared to Canada, it's very attractive from a real estate perspective.
Oh, yeah.
Extremely attractive.
Yeah,
So,
yeah. The pricing is outrageously cheap in my view,
Yeah.
compared to the United States as well. So,
okay. So,
All right, let's talk about cheap prices.
all right.
yeah.
Bitcoin.
Well, so to me, this is just an enormous buying opportunity. I mean, we're recording this on Monday the 20th. Over the weekend, people probably know that it went down to 17.5, which was kind of what the high was in 2017. Of course, I was buying at that high, and I was also buying a year later at 10,000 and doubled down. I'm buying a year later after that at 3,800. These are the buying opportunities. I mean, this is where you really get to accumulate a lot of sats cheap. And you know, obviously it hurts to the person who came in new at 69, and that's why whenever I'm orange pilling somebody, my first comment to them is this is extremely volatile. It can have 50% drawdowns, and you need to dollar cost average. And you know, the one I use and I recommend highly because I know they're good people is Swan Bitcoin. But you know, and I'm not being paid to say that. It's just they happen to be a great company. I'm a customer. So the opportunity presented here is really extraordinary. And let me just point people towards something that's a data point that they can use. On Twitter, there's something called the Tip Meyer multiple, TIP Meyer. If you go at TIP Meyer, you'll see it. And what it does, it's very simple. It computes the closing price of Bitcoin on any given day compared to the 200-day moving average price of Bitcoin. And it shows you what percentage of the time it's been at that level. And the average over all the data points from the inception of Bitcoin is 1.4. So Bitcoin typically trades at 1.4x the 200-day moving average. Right now, it's like at a 50% discount to the 200-day moving average. On the bottom in 2017, it had only been cheaper relative to the moving average, like 1.7% of the data points. So in other words, if you're trying to look at something, if you're trying to say, you're supposed to buy assets when they're cheap and sell them when they're dear, if something is at a ratio, and you're using a 200-day moving average as kind of your baseline, because it's growing over time, of the valuation of this asset, when you're at an extreme that you've only been at 1.7% of the data observations, you should be buying the living shit out of that asset. I mean, you really should. And I did. I actually bought some last week. I announced it on Twitter. I was a little early. I paid in the 20s. I didn't get the 17.5. There weren't probably that many people who did get the 17.5 because it wasn't there for that long and you had to be paying attention over the weekend. But the point is right now it's still at 19, 20, somewhere in that edge. And who knows, it could come back down and double bottom. It could go down to 10 or 12. If it goes down there, I'm going to find some more gold shit to sell so I can buy more.
Yeah, but it's not gold shit. You could find other stuff, other assets. Now, Larry's not a macro hedge fund manager per se. Listen, anyone who owns bonds and owns 0 Bitcoin, I promise you should be selling your bond position before you sell any of your gold position to fund Bitcoin. But could I build on something Larry said, okay? As a risk manager my entire life, you need to firstly understand the difference between value and price, okay? Prices get bid to crazy high levels, not on fundamentals, but on supply and demand for money. And then conversely, prices get pushed down to absurdly low levels based on the withdrawal of money from the system. Okay, we are currently experiencing a withdrawal of liquidity or money from the system, and it's impacting all assets. But I tend to, over the long term, believe, and I've yet to be proven correct, that the value of Bitcoin is as a credit default swap contract against Fiat, a basket of Fiats. And the beautiful thing about that CDS valuation is it has no counterparty risk and it has no theta or expiry date. You own this insurance. So don't ever confuse value versus price, people. Understand right now, in my opinion, this is the Foss opinion, Bitcoin has never been cheaper on a relative value basis to other assets in the world and the insurance that it provides. That being said, I lived through the great financial crisis in 2008, and prices can and most likely will, I hate to say this, go lower. Why? In the short term, there are liquidity pressures from traditional finance and from the crypto space that are pushing the price of Bitcoin down because people are forced sellers, okay? Which leads me to my most important point. I have never advocated that Bitcoin maxis, despite the fact that they are maxi proponents of Bitcoin, should ever own 100% of their exposure in Bitcoin. You need dry powder? Okay, true that. But more importantly, and this is why this applies to everybody in the world, owning 0 Bitcoin is actually more risky than owning a proper portfolio allocation. And you need to understand and do your own calculation as to what the proper Bitcoin allocation is within your family situation, within your children's situation, okay? But that number is very rarely, if ever, in my family, it will never be 100%. And start sending the hate mail, you stupid fucks, okay? If you need to. At the end of the day, it should not be 100%, okay? You don't need to own 100% in Bitcoin to participate in the asymmetry or the upside of the trade. Bitcoin remains the best asymmetric trade opportunity I have ever seen, okay? That doesn't mean that it's going to turn around overnight. Why? I mentioned the reasons. More importantly, it doesn't have to, because we're playing the long game here. And until the information changes, don't change your investment strategy, which is to say, Bitcoin is actually more valuable now, the price has gone down, and you tell me the solution to the Fiat Ponzi. If you actually think you have a better solution to the Fiat Ponzi, and you convince me that you're right, I may change my portfolio allocation. But until then, I stick with the thesis and I dollar cost average. And by the way, has Greg Foss ever sold Bitcoin? You're damn right I have. Why? Because I harvest gains, but I'm not telling people to be traders. I did it for 30 years, okay? Sometimes your spider sense tells you there's a time to sell some. Sometimes your spider sense tells you there's time to buy some. But unless you have spider senses honed from being in a risk chair like Larry and I have for our entire lives or working lives, best dollar cost average strategy, get up to your holding, whatever makes sense for your family. And then if the price does go up, hey, guess what? Harvest some of the gains. Don't allow, or not allow, but don't feel great that your 5% portfolio holding has tripled and now it becomes a 15% portfolio. If you are not comfortable with the price of Bitcoin going down, I hate to say this, You own too much, okay? Hate to say that, but anyone who's out there feeling the pressure of Bitcoin price going down materially, everyone hates it, but if it's gonna change your life because the price has gone down too much, I hate to say it, but you own too much. Your risk management techniques are not as good as they need to be.
Yeah, you have to look at it objectively. One other point I would make is it's not really that Bitcoin is volatile. It is, as measured in dollars. But what's going on here, the bigger macro picture that everyone's got to focus on is that fiat money is failing. I mean, this is what happens when fiat money fails. The dials just start going nuts. I mean, you know, they said there was no inflation. They were struggling to get 2% inflation. Suddenly, they've got reported 8.6% inflation. If you look at it as measured by SGS or the import numbers, it's 18% inflation. You know, so now they're going to step on the brakes and they're going to try and create a deflationary cascade. And maybe the prince will come down. This happened in the 70s. There were several waves of inflation in the 70s, but they were all aiming upward. And then, of course, we know that the solution was Volcker jacking interest rates to 20%. I think it's very interesting if you listen to smart guys who've been in the business for a long time, and Druckenmiller was one that I looked at. He said, you know, remember, we have never had an instance where we've calmed inflation without putting interest rates above the inflation rate. If the inflation rate is 8.6%, if we were to take interest rates to 8.6% today, the entire world would be bankrupt. I mean, we can't.
Well, we already are bankrupt, but then it
yes.
would become untenable because everything would break down.
Everything would just
We are
collapse.
bankrupt right now, but at least we have a GDP that's functioning to pay, apparently pay the bill.
So I think for people who are suffering at this low price or feeling, you know, upset about this volatility, imagine we're in just an enormous friggin' hurricane. It's like it's like an enormous shitstorm of money failing. Okay, and you got a really solid boat that you know can stand any size wave, that you know is going to come out the other side, that every 10 minutes ticks out another block, you know, that's increased in value consistently. It's the best performing financial asset in the last 14 years. You hang on to your goddamn boat. You just hang on and you forget about it.
And you sell stuff that won't perform as well over the long term.
And you go do something else. You know, it's like get away from the screen.
Right.
You know,
don't
overtrade
lower your
it.
time preference. You know, that's the.
It's hard. I mean, it's hard. There's no one who likes watching it go down.
Well, and it's also, you train yourself to understand
what you're looking at.
Well, listen to crazy. Look, you orange pill someone that you convince them to get not 5% of their assets in Bitcoin, and then it's like they forget what the other 95% of their assets are in, right? Oh, don't forget the NASDAQ is down 20%.
Right.
Okay. Bonds are down 20%. Larry said 20%, depends what index of bonds you're looking at. But the point is, never in history have bonds and the NASDAQ been down double digits in the same quarter.
Right.
In history. Now, that's not to say bonds have never suffered a double-digit drawdown. It's just to say that the NASDAQ didn't exist the last time the bonds did suffer a double-digit drawdown.
In these deflationary impulses, which is what we've just had an enormous deflationary impulse. The only thing that works is cash. And the reason gold kind of works is gold is cash that can't be printed, right? I mean, for now. Yeah. So it's hard. And I mean, what the Fed has done, I mean, it's criminal the way they let the bubble get created, and that's where they should have solved the problem. But now, ironically, they're doing exactly what they did in the Great Depression, which is they're tightening into a collapse, and it's going to make it worse. Yeah. It's going to make it much worse.
Don't worry, it's a lawyer, right? Like,
it's
going to. That's the problem.
It's going to make
you may have a guy that's never.
And you know, when they flip and go the other way, and this is a point I think is very important to make, is that eventually the whole thing will come completely unglued with the next flip, in my opinion. Because what needs to happen for hyperinflation to take hold, what needs to happen is a majority of the people have to come to the conclusion that there's no way they can ever stop. That they can never stop.
Yeah, but that takes math. That takes math, Larry.
I get it.
Are mathematically challenged.
I get it. But
most people are mathematically
once people get to that conclusion,
the big money,
then they're going to go to the Fed. They're going to say, "Sold to you, Fed." Yeah. And so I think we're going to see yield curve control. I think we're going to see the U.S. government getting the right to buy stocks and bonds. It's going to be the Protect America's 401k program. I think we're going to see universal basic income. We've already seen, you know, California and recently Romney talked about giving out checks to help people deal with high gasoline prices. Well, where do the money from those checks come from? All of the things they're talking about are continued inflationary. Yeah. And eventually, you know, old Sir Gresham is going to show up. Gresham's law, the good money,
Wins out, yeah.
chases out the bad, and people are just going to realize, I can't save in this money anymore. It's no damn good. Give me something that's sound. Give me something that you can't print. The two non-state monies are gold and Bitcoin.
Beautiful.
Now I'm sitting here with a couple of older guys.
Yeah. Really old guys.
You've seen nation states pull some nasty shit in
yeah.
your time.
Yeah.
Larry, you were probably around when they were, doing
I
the draft.
Yeah, I was very close to being drafted for Vietnam. Yeah.
That was just guys pulling numbers out of a hat
Yep.
to send boys to their death.
Yep, exactly. And kill 3 million innocent Vietnamese people. I mean, Henry Kissinger should be in jail. I mean, it's sad. It's tragic. It's absolutely tragic. Yeah, I've seen them do a lot of bad things. I mean, we saw, look, we know they will break the rules, right? They broke the rules in 2008. It was socialism for the bankers. They bailed out all the people who would basically run the system for their own benefit. I mean, they did it to me in 2008. I was short financial stocks. They outlawed that. It cost me a huge amount of money.
Is that what radicalized you at that point?
That was what radicalized me.
Right.
Yeah, that was when I went really ballistic and said, oh, okay, I get it. We're not playing a fair game here. I get it. And, they've been manipulating the gold price, still have, still are. I worry about that with Bitcoin. The good news is Bitcoin is so new and moving so quickly that I think we're going to outrun their ability to manipulate it. The futures market has not gotten big enough. It's growing, and that's a concern. But I don't think they're going to be able to manipulate Bitcoin. I really don't.
So bringing Larry's and my experience and dovetailing it. And by the way, have you had a drink of your beer yet?
That is empty, man.
Empty, mine too. I was hoping you had some left, but I was. But here's the thing. Larry actually used the wrong instrument, unfortunately, to short the financial system.
I didn't know about CDS.
Isn't that crazy, right? Most people don't know about credit default swap contracts, an area that I spent my life in, and well, credit to begin with, but when they developed this tool called credit default swaps, you were able to bet on the decline of U.S. subprime mortgages using credit default swaps. Yet you were not able to short the company MBNA that had huge exposure.
Which I was short.
You can't short MBNA
or AIG
equity,
or Lehman.
Okay, but you could actually buy protection, CDS credit default swap protection, which is the equivalent of shorting the credit. The Fed, the easy thing to do is stop trading in the equity as subordinate claim. But the funny thing is, the guys that were running the boat, the CDS swap traders, they weren't restricted from buying more protection on these names.
And you had the ratings agencies.
Okay, so that's you talk about Kissinger should be in jail. There's certain credit rating analysts that I'd throw up as a candidate for.
Disgusting.
Yeah.
So this, I spent 18 years in financial markets.
Right.
Foss your whole career, Larry your whole career.
Yeah.
It's fucked.
Unfortunately, the status quo is messed up.
It's not a fair game.
Not only is it not fair, it cannot possibly win mathematically. And math is the base layer of language. You are not going to change mathematics. Math exists because it explains the universe, okay? And the reality is the debt spiral, and this is a shout out to Luke Groman, a friend of both Larry's and mine, who's done some really good analysis on the reality of the US debt situation. It's where I spent my area of analysis as well. The debt spiral is now certain to continue to accelerate. It's only mathematics. And most importantly, we will not achieve escape velocity. There is one path. I don't even want to talk about the unlikelihood of that happening, but that path is just so dangerous, and it's what Japan is trying to execute right now, and that's why you need Bitcoin. Look at the experience with the JGB market, the yield curve control with the Japanese government bonds attempts, and see how quickly the world gangs up against that, and realize ultimately it's a game of whack-a-mole, okay? And you continue to try and beat down the less strong fiat currencies, and those currencies fail first. And those are the people that need Bitcoin first, right? The lesser developed countries. But everybody ultimately will need Bitcoin as protection against fiat, because every fiat is programmed to fail. It's the only
and the rate, because the second derivative has now gone substantially steeper, the failures,
convexity.
the failures accelerating.
The acceleration.
So the lifespan of today's financial system is measured in something between 2 and 10 years, in my opinion. I mean, I'd be shocked if we make 10 years.
I'm hoping we do, because my metric is Canada will fail 10 years before the United States does, and Canada still hasn't failed. So that means that the USA, in my opinion, still has 10 years after that. But look, who knows?
But it's suddenly and then all at once, right?
Always is.
You know,
Always is.
like the USSR was a country until one day it just wasn't.
I agree,
right?
and that's contagion.
And the contagion here can happen, and it can happen extremely quickly.
Yeah.
And I think people aren't aware of that and not thinking that through. And that's why, to me, this is such an obvious trade. I mean, it's built in that it's going to happen.
It's a perfect option.
Right.
Bitcoin is
The
perfect
only
option.
issue is at what rate. And you know, we've got time. I mean, you know, and by the way, it's been working pretty well. I mean, obviously it doesn't work well if you buy the peaks and sell the dips. I mean, if you came in at 69 and you're holding it right now, you're not feeling great about life. But you know, hopefully if you came in at 69, you've got some other capital so you can average down, you know, and wait for the next cycle. Because I think on the next cycle up, we'll hit 200 easily. So, you know, it's...
And the next cycle could be the final cycle. And then you don't just hit 200.
Well,
as our friend Canute says, Bitcoin, everything divided by 21 million. All right? Infinity divided by 21 million is a potential price of Bitcoin.
And you know, I mean, people say, well, the coins will be worth $1 million a coin. I totally believe that. I think they could be worth more than that. The issue, of course, is will gasoline be $1,000 a gallon, right? I mean, eventually you'll start measuring things in sats.
How about we do this? We
Not in
agree
dollars.
that the likely price of Bitcoin is $1 million plus in today's dollars. Okay.
Right,
What does that mean it will be in the future? Infinity. Like, come on. It's math. It's math.
Guys, we're going to have to shut this one down, but it's been an absolute awesome
Thank
week.
you.
And I'm going to sum it up. Don't own anywhere, well, no, don't own 0 Bitcoin.
Correct.
And don't own 100% Bitcoin.
My advice,
Correct.
Fred, you know, you figure it out.
Correct.
All right.
But you should own some. Monetary debasement is mathematically certain.
100%. That's the only certainty in finance. That I'm saying it another way. The only certainty in finance is that fiat currencies will continue to debase on an accelerated basis.
Yes. that's
Very
correct.
simple.
Thank you so much, guys.
Thank you, Dan.
It's been
Very
great
much
getting
That was
to know
great,
you.
buddy. That was great.
Yeah, it was great
And
pleasure
thank
to
you to
meet you. Thank
Andre,
you.
right?
Yeah, thank-
Andre's sitting in the
Andre
corner, but
Madeira.
he's flying under the radar.
Change-
He's next up.
Changing
He's
the
next
world.
that's
up.
right.
Changing
He
the
is,
world.
he is. All right. Cheers, boys.
Cheers, guys.
Rock and roll. Thanks for having me.
Thank you.